and welcome to the British Columbia Real Estate Association's Housing Market Update for June 2011. Home sales across the province edged down 1% in May compared to the same month last year. On a seasonally adjusted basis, BC home sales declined 2% to an annualized rate of 73,400 units last month compared to April. Moderate consumer demand was the result of tighter mortgage credit rules that took effect in April, more tepid employment growth, and a sizable number of home purchases that were pulled forward into the first 3 months of the year. However, the lull may be short-lived as recent downward pressure on mortgage interest rates provides some additional incentive for home buyers this summer. Total active listings in the market continue to remain relatively unchanged at around 48,000 units in May on a seasonally adjusted basis. While home sales ebbed in both April and May, new listings to the market also declined, keeping the total number of homes for sale on the market at a relatively even keel. Nevertheless, the sales to active listings ratio did edge lower, down from 13% in April to about 12.5% in May. A balanced market typically exhibits a sales to active listings ratio of 15 to 20%. However, regional markets can vary significantly, so contact your local realtor to identify market conditions in your community. The average MLS residential price in BC increased 20% to $597,000 in May compared to the same month last year. As discussed in previous broadcasts, the average price level has been skewed artificially high as the result of a greater proportion of sales occurring in Vancouver, in pricier markets within Vancouver, and in more expensive detached home types. Now let's take a look at market conditions around the province. This month's In Focus looks at the BCREA June mortgage rate forecast. The Canadian economy enjoyed a strong first quarter with real GDP expanding at 3.9%, though this growth was largely driven by an accumulation of private inventories that is unlikely to be sustained. With first quarter growth in consumer spending flat and the majority Conservative government looking to slash spending, the heavy lifting in the economy will be left to private business investment and to the trade sector, the latter of which is being challenged right now by a high Canadian dollar. We anticipate that growth will slow substantially beginning in the second quarter to around 2.5% for the remainder of the year. We are forecasting overall economic growth in 2011 to be 2.9%, followed by 2.5% in 2012. The recent increase in Canadian inflation to over 3% has some fearing a trend of higher inflation ahead. While total inflation is certainly higher, this is exactly what we would expect given a nearly 25% increase in energy prices since February. However, inflation measures the rate of change in prices, not the level. And so as commodity prices stabilize, even if they remain at higher levels, the rate of inflation will decline. Core inflation, which excludes more volatile components such as food and energy, increased a relatively tame 1.6%. We expect that both core and total measures of inflation will converge to the bank's target of 2% by the end of 2012. While we don't expect either short or long-term interest rates to rise dramatically, higher interest rates are on the horizon. It's not a matter of if, but a matter of when. We do expect the 5-year posted mortgage rate to reach 5.8% by the end of this year and 6.5% by 2013. While higher rates are expected over the next 18 months, they will remain quite low from a historical perspective and are not expected to stall the housing market. Well, that's it for the June Housing Market Update. Thank you for joining us, and I hope to see you next month. Bye for now.